support material here is grouped, 13, 14, 15. You'll see 14 and 15 are very short units, it's all theory. 13 is the last real accounting unit that looks at disclosure. So right at the beginning, I spoke about different forms of ownership. Which form of ownership are we going to be focusing on? Sole proprietors. Do you agree? Why? Because you're law practitioners, right? And lawyers generally open up their own practices, maybe, some of them. Okay? Some of them partner with other people. Okay? But generally, lawyers can operate as individuals. Okay? You can do your job individually, okay, unless you require assistance from other lawyers. Okay, but that's the flexibility that you have in your profession. Okay, so when looking at a sole proprietor or a sole trader, you're looking at exactly that. You're looking at one person running a business, okay, managing a business. Is it important to disclose information? Very important. So even if I'm a sole proprietor, I still need to have an idea of the financial statements in terms of what the statement of financial position has, what the statement of comprehensive income has, what the statement of changes in equity has. Okay, those are the three statements that you could see come up. Okay, the first two are the most important. I haven't really seen them test this one, okay, in past papers, because it's literally just capital. You're just looking at capital. So the first two are very important. Those two you could probably see a question about them, and maybe even both of them. This we've covered before, so a bit of revision. We need to make sure that our statements are prepared on a going concern basis. Going concern means things are going to continue to operate as normal. Okay, the business isn't going to close. Relevance are things important, relevant. Okay, material. Material means important to our, or let's say it's something that's going to affect our decision making. Faithful representation, things need to be accurate. Things need to be truthful, honest. Okay, it needs to be, there has to be a level of integrity, okay, when you present your information. Comparability, we need to compare things year by year. Verifiability, meaning can I verify, meaning is there an audit trail? Do I know what the source documents are, okay, to verify the transactions? Timely information needs to be prepared year by year, okay, so we can't prepare statements for 2 years ago, okay, it needs to be for the last financial year. It needs to be timely. And we need to understand what's in the statement, and that comes back to our basics. NB, your rules. Okay, I've always stressed the rules, and I will always stress the rules. You need to know what they are. Okay, the hardest point or part that you're going to have to get your heads around is each point that they give you, each transaction that they give you is going to have to be interpreted. Okay, so can you interpret what's happening in the transaction? If you can, then you can get full marks. Okay, it's not that bad. Okay, because it's still introduction. Okay, they haven't taken it to another level. Right, so assets, liabilities, income, expenses, and then capital and drawings. Those are the 4 accounts that you need to know. When looking at the accounting process, this last chapter here, well, when I say last, I mean in terms of like the accounting. The last chapter is the statements. Okay, in other words, we're preparing or we're creating those statements that people are going to use in order to make decisions. Right, so this thing here is going to tell us, is this business in a good or bad position? Okay, by looking at the actual statements. Right, this is very important because I've summarized what you have previously. Okay, so I've grouped these two together. Where do I show those two? There's the answer. Statement of financial position. Statement of financial position. Are assets good? Yes, you want them. Are liabilities good? No, you don't want them. Okay, but businesses will have both. Businesses will have assets, businesses will have liabilities. Depending on how the business is doing, the business will either have more assets or more liabilities. It all depends. Then you've got income and expenses. Income is looking at comprehensive income. Okay, expenses, comprehensive income, i.e., do we have a profit or not? Okay, so the profit is the income minus the expenses. So where do we show that? We show that in the statement of comprehensive income. That's where we show that calculation. That's where we do the calculation. Okay, we actually do the substitution. We substitute the amounts into the actual statement. Okay, we pull it through from our records, and then we actually calculate. Is there a profit? Is there a loss? What is the profit? What is the loss? Okay. All right, there's your rules. Make sure you know them. The better you know the rules, the easier accounting gets. Okay, by now, you probably have a pretty good idea of what the rules are. So if I ask you expense, already you think debit plus, credit minus. Okay, you should be at that level by now. I mean, we've had a few weeks, or quite a few weeks now already. I'm going to be doing the next assignment soon, and I'm going to be posting that video up as well. Okay, so it's just because we don't have as much time to do it together in class. Okay, so I will do it for you guys, record it for you guys ahead of time, send you guys the answers, Excel spreadsheet, and then you can watch the video to see my thought process. What was I thinking when I was doing that assignment? Okay, and that'll help you when you submit your next one. Okay, so here we're focusing on disclosure. Here's a quick test. I want to see if you would be able to tell me what the position is in this particular business, good or bad. Okay, well, let's look at what we've got. What is bank? It's an asset. What is equipment? Good. What is vehicles? Good. Okay, so if I know these are assets, are all assets the same? No. Why do I need to distinguish between long-term and short-term assets? Because of disclosure. That's the only reason why. Okay, in the statement of financial position, you need to show your long-term assets, and then you need to show your short-term assets. If I'm looking at the difference between these amounts, okay, so owner's equity, assets would be what? Let's add those three amounts. 3 plus 8 is 11. 11 plus 14 is 25. Okay, so you've got 25,000 Rand worth of assets equal to capital, 25,000 Rand capital. So does this business have any liabilities? No, it doesn't. Okay, they don't have any liabilities. So everything that the business has was financed by the business. Okay, the business operated, generated some sales, okay, had profit, had savings, and then built up to have something that is of value. Okay, equipment, vehicles, bank. Okay, and that's what we're looking at here. So just a simple example showing you the importance of identifying what things are. If you don't know what things are, you're not going to know where to disclose them. Very important that you cover that in detail. Okay, something else to consider. Accumulated depreciation. You should know it's a negative asset, right? If it's a negative asset, where do I disclose it? On the debit side or the credit side? On the credit side. Good. Okay, because you know assets have a minus on the credit. So a negative asset would have a credit balance. Would you disclose this? Yes, you would. You would disclose this against your cost. Okay, for your property, plant, and equipment. Okay, so what do the users want to see? Do the users want to see the cost, meaning what you bought the asset for 10 years ago, or do they want to see what the asset is worth today? Exactly. And that's why when you look at disclosure, you need to process the depreciation. Depreciation is an expense, so where do I show it? Statement of comprehensive income, because expenses are shown in the statement of comprehensive income. Where would I show a negative asset? Well, it's still an asset. So, statement of financial position. Okay, assets are assets. Doesn't matter if they're negative or positive. They're still assets. They go to the statement of financial position. Okay, where would you show it? You would show it as part of the property, plant, and equipment, because that negative asset is going to reduce the value of my assets. Okay, makes sense.